Hey, it is 12 noon on Wednesday, which means it's time for this week's episode of Ask the Instructor. I'm John Christman. This show is brought to you by the Tampa School of Real Estate. Every Wednesday, 12 noon Eastern Time, we're here live helping you understand the technical side of the real estate industry. And what we're talking about today are credits, debits, transfer taxes, documentary stamp tax on the deed, documentary stamp tax on the note, the intangible tax, and then how these are going to show. If you just know the whole makeup and debits and credits, look for your real estate exams, that's probably going to get you halfway to the right answer right there, because you can just use process elimination on the wrong answers for just eliminating the incorrect debit and crediting on there. If you could figure that out, again, you could probably eliminate half of the answer choices. So this is what we're talking about today: credits, debits, transfer taxes, documentary stamp taxes, intangible taxes, math. We're doing some math today, so for all you math fans out there, strap yourself in, get yourself ready. You're watching Ask the Instructor.
You are watching Ask the Instructor. Absorb the knowledge. Become the expert.
Hey, what's going on? It's 12 noon Eastern Time. You know the drill. It's time for Ask the Instructor. I'm John Christman. This show is brought to you by the Tampa School of Real Estate. We're here live, so if you've got questions, if you've got comments, if you just want to say hi, drop that in the chat. And, you know, if it's a question, if it's something we can help you out with, we want to help you out. If you're watching these videos to help study for the Florida real estate exam, look, you're in the right place for that. We've helped thousands of people just last year obtain their real estate license, let alone since we started back in 2007. We are your exam prep specialists, and that's why we're here for free on every Wednesday doing videos to help you understand the technical side of the real estate industry. And again, what we're talking about today is all these computations that you're going to find on a closing statement. And so what we're talking about today are debits, we're talking about credits, we're talking about the transfer taxes, the intangible tax, the documentary stamp tax on the deed, the documentary stamp tax on the note. But before we get way deep in the weeds with all of this, all the details, let's just cover the simple fundamentals of a debit and a credit. So a debit means that you pay. So a debit is something that you have to pay. And then we have the credit, which means you're going to receive. This is where you're receiving money. And everything on the closing statement is either going to be a debit, where it's a payment, or a credit, and sometimes it's both a debit and a credit depending on who it is that we're talking about. So let's do an example here. Let's talk about the sales price. Just to make sense out of this, the sales price. How does the sales price appear on the closing statement? So if we ask the question, who's going to pay the sales price? So if we think about who's going to pay the sale price, that's going to be the buyer. The buyer pays for the sale price. And so what is that going to be? Well, if they're paying it, that's a debit. But now this is one of those things that shows up on both sides of the closing statement, the buyer side as well as the seller side, because we've got to ask that question, well, is there somebody that's going to receive that sales price? Well, absolutely. That's going to be the seller is receiving. So that's going to show as a credit to the seller. And so that's for our sales price. And there's a lot of different things. Every different item. We've got the earnest money deposit. We've got the prorations for property taxes. If there's a proration for prepaid rent, if there's a proration for assumed interest, there's going to be a system of debits and credits on your closing statement. If we have mortgages involved, that's going to show up as either a credit or a debit, depending if this is the seller's mortgage that they're paying off, the buyer's mortgage that they're obtaining. Maybe it's a mortgage that's going to be assumed. That's the system of this credits and debits as well. And again, if it's a payment, that's a debit. If you're having to pay this money, that's the debit. This is again where you're paying the money. So that's going to be a minus. Whereas the credits, those are our pluses. This is where you're receiving the money. And this is a whole system of pluses and minuses, or what are called debits for the minuses, credits for the pluses, that all basically balance out to determine what ultimately the buyer's going to have to bring to the closing table. The cash needed to close is what that's referred to as, cash to close or cash needed to close. That's what we're trying to figure out for the buyer, how much money they need to bring to closing. And then on the seller side, we're trying to figure out the seller's net, how much money it is they walk away with. So we take the big amount of money the seller's receiving, this purchase price, but then we subtract out all the debits. So one of the biggest things that eats away at the seller's net proceeds is their outstanding mortgage balance. So when they pay off that mortgage, when they sell the property, if they're selling the property for $200,000 and they owe, let's say, $150,000 on their mortgage, they're left with $50,000. But then we have commissions that factor in, and then we have other closing costs that factor in, all these prorations that might factor in, and this all works out to where we're left with how much money the seller's able to walk away with. And we do the same thing on the buyer side, where the buyer has to pay this purchase price. So they start off with a great big negative balance of, let's say, $200,000. But if they're receiving a $150,000 mortgage, or let's say a $160,000 mortgage to make it the 80% loan to value here. So if they're getting $160,000 in a mortgage, that's going to show as a credit to the buyer. So now, if they're paying $200,000 for the price of the property, but they get a credit for a $160,000 mortgage they took out, they're left with now $40,000 that they've got to come up with. But then we also have other debits for the closing cost and also these transfer taxes that we're going to do the math for today as well. So that's a basic overview of this whole systems of debits and credits. We're going to take a quick commercial break, but stick with us because next we're going to be talking about the couple more debits and credits. I want to talk about the prorations, how those typically show as, because that's definitely an important one for your exam. And we're also going to do some calculations on the transfer taxes. So stick with us. I'm John Chrismo. You're watching Ask the Instructor.
The most powerful tool to study for your real estate exam is the Question Simulator from Tampa School of Real Estate. We've used our years of experience in preparing students for the Florida real estate exam to bring you the most powerful exam study tool available. In the Question Simulator, you'll be able to go directly to a particular unit so you can focus on the sections where you need the most practice. We have also included the percentages of each unit so you know which units are the most important for your real estate exam. Every question will immediately give you detailed feedback, which is almost always more important than the question or the answer themselves. After completing all the questions in a particular unit, you can go through question by question and review any that you've gotten wrong. You could also print out a report at the end of each quiz. The Question Simulator from Tampa School of Real Estate is 100% mobile compatible, so you can practice with test questions anywhere you have your phone with you. Enroll now at questionsimulator.com and get ready to pass your exam.
Hey, welcome back to this week's episode of Ask the Instructor. I'm John Chrismo. This show is brought to you by the Tampa School of Real Estate. Every single Wednesday at 12 noon Eastern Time, we're here live helping you understand the technical side of the real estate industry. And this is a really helpful episode today if you're trying to study for your Florida real estate exam, because I guarantee you're going to see credits and debits and probably transfer taxes in at least one question, if not multiple questions, on your Florida real estate exam. This is a really important topic to understand how property is settled, how closing transactions actually works. So we talked about the debits and credits, what they are. You've got to have that basic understanding if you're going to be able to accomplish any of this other stuff here, because even if you could do the math, if you don't know how this shows as a credit and a debit, then you're still not going to be sure of what that right answer is. You might make a good guess and still get it right, but we're not here to guess, because 100 questions is a lot to guess accurately on for these exams. So, and this is, if you don't remember how to do the math at all, you at least could probably narrow down your answer choices to 50-50, maybe even the right answer just by knowing how the debits and credits work out without even having to do any sort of the math for the transfer taxes or even the prorations sometimes. So let's quickly talk about prorations. That's not really what today's topic is on, but it does relate with the debits and credits, and we've got other videos of Ask the Instructor on prorations, specifically calculating the different types of prorations. So if you want to see those, make sure you check out tampaschool.com/success. Again, that's tampaschool.com/success. But anyways, prorations. Just to give you a nice condensed version of that, prorations are almost always debit to the seller, credit to the buyer. Meaning that the seller is paying the proration and the buyer is receiving the proration. So if you're just looking for something quick and easy to memorize, write that one down. Debit to the seller, credit to the buyer, prorations. Very rare circumstances where your proration is not going to be a debit to the seller and credit to the buyer. And those are the prorations of property taxes, prepaid rent, or assumed interest. Again, almost always debit to the seller, credit to the buyer. That one little tidbit right there might just help you get an answer right on your exam. Debit to the seller, credit to the buyer for prorations. But now let's talk about these transfer taxes. So the transfer taxes, these are the intangible tax, the stamp taxes, and we have the two different types of stamp taxes, the stamp on the deed and the stamp on the note. So I like to use the acronym DIN. I know there's some other acronyms out there, but they don't always make the most sense, so I use the acronym DIN. And yeah, DIN isn't a real word, but it sounds like a word, and so we're going to use this acronym. So we've got D for deed, N for note, and I for intangible. The DIN. And this is our deed stamp, our note stamp, and then our intangible tax. Just our simple intangible tax. And really all three of these are all taxes. So it's the deed stamp tax, the note stamp tax, and just the intangible tax. Now some of the things it is that you want to note with each one of these before we even get into the math is the deed stamp is based on the price. So the deed stamp tax is based on the purchase price of the property. The note stamp tax is charged on all of the loans, and the intangible tax is only charged on new loans. So before we even get into calculating these, you've got to know when it is that they apply. The deed stamp tax, that applies to the purchase price. The note stamp tax, that applies to all the mortgages. And the intangible tax only applies to the new mortgages. So you've got to get this down again first before anything else. Deed stamp applies to the price. Intangible tax is only new mortgages, and the note stamp applies to all the mortgages. But here's some of the other things you got to know. You've got to know how to do the math. You've got to know which one of these apply to who, because your questions on the exam might say calculate the seller's, and remember, these are called transfer taxes. So these are called transfer taxes. So they could say calculate the seller's transfer taxes, calculate the buyer's transfer taxes, or maybe calculate all of these transfer taxes. So not only do you want to know what these are based on, you want to know who pays for them, how these are going to show as credits and debits. Really, it's just going to be debits. We'll give that one away right now. These are all just going to be debits. There's no credits for any of these here. And then also how to do the math on these. And that's what we're going to talk about next. But first, we're going to take another quick commercial break. Stick with us. I'm John Chrismo. You're watching Ask the Instructor. Have you completed your post-licensing education yet? Look, I know you're probably thinking, hey, it's not my renewal deadline. I don't need to do post-licensing yet. But look, here's why you want to do post-licensing as soon as you've got your real estate license, as soon as you're able to take post-licensing. It's not just another course about arbitrary laws that you're never going to use again. It's about real-world, usable topics that'll help you grow your real estate business, to help you take it to the next level. Look, let me ask you this one question. If this course helps you close just one deal, if you get one extra deal from post-licensing, is it worth the investment? I'd say it is. We get paid pretty well, so one deal means a lot of money. Check out postflorida.com. That's postflorida.com for the full details about post-licensing. Hey, welcome back to this week's episode of Ask the Instructor. I am your host, your instructor, your guide through this really exam prep world. We've got some great study tools if you haven't picked up on that with our commercials already. We just launched a brand new version of our MP3 audio review, which features yours truly. Right now, we've got that on sale to celebrate the new launch of this new version of the MP3 audio review, but that price will not last long. We are increasing the price on that. We've increased prices on things before because we know these things work and we know they're better than everything else that is out there. So to get your free sample as well as lock in that sale price at mp3audioreview.com. This is a really powerful study tool that lets you condense down the entire course into just 5 hours. The entire 63-hour pre-licensing course into 5 hours of the most important key points. It's broken down by unit, so if there's a particular unit that you want to review, you could jump right to that unit. And this is part of our pass first try strategy. Ideally, you're using this MP3 audio review while you're in the course, and you're using this to reinforce constantly as you go through the course. That's the number one best time to use it, is right there when you start the course and start reviewing right away. The second best time to start using that is now. There's no better time than the present to start reviewing those basic key points. And we've also got the question simulator. We'll talk more about that later in the show, but now let's get back to our content of these transfer taxes. So we talked about what the transfer taxes are. We've got the deed stamp tax, the intangible tax, and the note stamp tax, forming this acronym of DIN. Now, the deed stamp tax is based on the purchase price. The intangible tax is based on just the new mortgages, and the note stamp tax is based on all the mortgages. Now, if we pay attention to what these apply to, it's going to be really easy for us to break down who pays for what. So these two taxes that are based on loans, you got to remember whose loans these are. These are the buyer's loans. They're getting taxed for taking out these loans. They're getting taxed for taking out new loans, as well as even if loans are assumed. If it's a new loan or it's an assumed loan, we always have to charge the note stamp tax, but we only charge the intangible tax for the new loans. But again, these are the buyer's loans, so these are going to be charges to the buyer. So if the question on your exam says calculate the buyer's transfer taxes, we could ignore the deed stamp tax because this one is the seller's responsibility. Now, in the real world, these can be negotiated for who pays for whose closing costs, so this is not set in stone. This can be negotiated, but just in case on the exam, if it asks calculate the seller's transfer tax, or it might call one of these out specifically. There's a lot of different ways they could ask these questions on the exam. They could even ask you for all of the applicable transfer taxes or all the taxes resulting from the sale of this property, which then we would calculate all of these taxes because the question says all. But that's what you want to identify first when you go through these questions, is which calculations do you need to do. Now, you also want to remember what these are based on because the question probably will say maybe what the purchase price is as well as the loan amounts, but if it's asking just what the buyer's transfer taxes are, that's where you want to remember that we don't need the deed stamp. So we're not going to need the purchase price, we just need the loan amounts, and that's it. Now, getting into the formulas for these here, we covered who pays for what out of all these here. And first, let's do the easy one first, because this is I always like looking at studying for your real estate exams like a pyramid, essentially, that you want to start at the top of the pyramid and get the least amount of information that's going to give you the biggest impact towards your exam. That's why with our MP3 audio review, it condenses the whole course down to just 5 hours to review just those most important key points. Because if you could break it down to the least amount of information that's going to give you the largest impact, that's the least amount of studying. And everyone's looking for the 4-hour work week where you could do the least amount of work possible. And that's where you want to start out. Now, as you progress through studying, you're adding more and more information on. And now as you get down to basically knowing the entire course inside and out, yeah, that's great, but you don't need to know the entire course inside and out to be able to pass your real estate exam. It's great that you could do that because you're probably in really good shape to pass, but you don't need all the information in the course to pass. You just need that minimum effective dose. And to start off again, starting with the tip of the iceberg here, the tip of the pyramid of that least amount of information that's going to give us the greatest impact, that's going to be the intangible tax. This is the easiest one to calculate out of any of these. We take the new loans and we multiply it by 0.002. And that gives us our intangible tax. So the new loans times 0.002 gives us our intangible tax. Super simple to remember. You got to remember number one, it's only based on new loans. And then number two, we're just going to multiply that by 0.002. If you could do that, you could figure out the intangible tax. This is really simple to remember. The other two, the stamp taxes, they're a little bit more complicated for calculating them and what you need to remember to do the calculation. But if you can remember this, you might at least be able to get half the answer right. Or maybe it's just a question about just the intangible tax. So super easy to remember. And all of these here are going to show as debits and debits only. So we talked about how they're going to show on the closing statement and what debits and credits are. Now these transfer taxes are only going to be debits. So they're only going to show as charges, because if you think about this, yes, these are where the buyer has to pay or the seller has to pay. But who's receiving this money? It's the government. It's the state government. This is the local government that's receiving these transfer taxes. And the local government is not going to be included on your closing statement. The two parties on the closing statement are the seller and the buyer. So it's going to show that the seller or the buyer pay these different taxes, but it's not going to show that it's the state receiving them. These are going to show as debits only. Our commission is another one there on this, these calculations that are only, most of the expenses are going to show just as debits only. The only time we involve a credit is if the buyer or the seller is receiving money, and the buyer or the seller are not receiving any of these here. It's the government that's receiving these when these taxes are paid. So we've got our intangible tax formula. We're going to work through a math problem, a sample math problem of going through and calculating. We're going to do all of the transfer taxes here. But before we do that, we've got to know the other two formulas. So the deed stamp tax, let's start with that, because if you get one of these stamp taxes down, the other stamp tax is very similar in the way it's set up. We're going to start off, remember it's the price that we use for the deed, and we divide it by 100, and that gives us how many stamps we need to purchase. So remember, this is a stamp tax, and what we're buying are stamps, in theory. It used to be, before the digital age, that you would buy what looked like postage stamps. And these postage stamps were good for every $100 of purchase price. So you need to buy one of these stamps, one of these documentary stamps, for every $100 of purchase price. Now, why it's important to remember that is you've got to remember that you always have to buy stamps in whole pieces. If you go buy a stamp to go mail a letter, if you buy a stamp to mail a letter, and your letter is a little on the heavy side, you can't just rip a stamp in half and put half of an extra stamp on there. You've got to put a full extra stamp. So for these number of stamps, this is really important. You always have to round up. You always round up to the next whole number for the number of stamps. You always have to round that up. If you get 0.01 of a stamp, you've got to round up. And then we just multiply that by 0.70. And that's our stamp tax on the deed. And again, that number is going to come out as a debit to the seller. Now for the note stamp tax, it's very similar in the way it's set up. But number one, we're starting out with the loan amounts. We're still going to divide by 100. And that's going to give us our number of stamps that we need. And again, same rule applies. We can't buy a fraction of a stamp. We can't use a fraction of a stamp. We've got to buy a whole nother stamp. So if we don't end up with a whole number here, we have to round up to a whole number for that number of stamps there. And this is the other thing that's different. Up here, we multiplied by 70 cents. Down here, we're going to multiply by half of that, which is 35 cents. So we're going to multiply that by 35 cents for our stamp tax on the note. 70 cents for stamp on the deed, 35 cents for stamp on the note, which, yes, if you like the pattern of these numbers here, this 35 cents is half of 70 cents. So that's our formulas for what these transfer taxes are, but we still need to throw it into an actual question. So that's what we're going to do next. We're going to take this and apply it in an actual question that you might see on your exam. But first, we're going to take a quick commercial break, so stick with us. I'm John Carismo. You're watching Ask the Instructor. Are you studying for your Florida real estate exam? If you are, you need to check out our Pass First Try strategy. You're going to love this. It's 4 steps that we break down the process to study for your Florida real estate exam. So you're set up to pass your Florida real estate exam because that's what you're studying for, right? To pass your exam. It's 4 steps. Number 1, you learn the information. You've got to learn this to be able to pass the exam, but it doesn't stop at learning. Step 2, you've got to reinforce the basic, simple, key concepts. As you learn this information, keep reviewing the simple things. You don't need to know everything, but you got to review these basic key concepts. Step 3, you've got to test your knowledge. The exam's going to test your knowledge, so if you don't test your knowledge in advance, you won't find out if you know what you think you know until you take the exam. And then step 4 is be confident and prepared, because even if you know this material, you need to be confident that you know the material. Check out the full strategy at passfirsttry.com. That's passfirsttry.com. Hey, welcome back to this week's episode of Ask the Instructor. I'm John Chrisman. This show is brought to you by the Tampa School of Real Estate. Now, on that last commercial break, you just heard about our Pass First Try strategy. Look, this isn't just something that we came up with that we think sounded good. This is something that we've tested. This is something that we use with every single one of our students. We always recommend that they take these 4 simple steps to be prepared to pass their exams on the first try. Now, we talked earlier about that MP3 audio review, but what I want to tell you real quick about is our question simulator. Once you've got those key points down, step 3 in our Pass First Try strategy is to test your knowledge. And now the important thing with questions, and the biggest mistake I see people make with exam questions, is that they study exam questions as opposed to using exam questions. Now, when I say that, you want to use study questions, use test questions, not study those test questions. If we're not getting specific here of what I'm talking about, you're like, well, isn't it the same thing? Aren't we studying the test questions when we use them? No. You want to use the question to see if you understand that basic key point. But when you get a question wrong, that's not a bad thing. It just tells you. That's an eye-opener that says, hey, you got to go back and review this key point. In our question simulator, it's got over 700 practice questions in there, and it gives you that simplicity to see right away an explanation of why that question is right or wrong. And it's got so many questions in there, so you are able to see these questions in different contexts to see how they might show up on the exam. I can't guarantee you that any of them are going to be exactly identical, because they pull from such a large bank of questions, and they keep those questions under lock and key, but you're going to see very similar type of questions. We have many students that have taken the exam that have told us afterwards, hey, that question simulator is great. I remember seeing a bunch of those questions that were really similar on the actual exam. But even if these questions are similar, you don't want to memorize the question. You want to memorize the key point behind the question, so you use these questions to see if you understand the key point or if you've got to go back and study the key point. So you want to study the key points and use the practice questions to see if you need to go back and restudy those key points. But enough about that. You can try out a demo at questionsimulator.com. Go on there, check it out. At least go take advantage of those free questions that are on there. It's a really powerful tool to help you prepare for your real estate exam, especially if you combine that together with our MP3 audio review. But let's get back into the transfer taxes, and I did promise you that we're going to go through a practice question. We're going to do exactly that right now. Now, I'm going to shorthand up here what information that you're going to need to pull out of the question to get all of the transfer taxes, if the question's asking for all the transfer taxes. So we're going to need the price of the property. Now, typically on your exam, now in the real world, you might never encounter an assumed mortgage. It's much more rare for somebody to take over somebody else's mortgage than it is for just taking out a brand new mortgage. But that being said, on your exam, you're typically going to see a question where you've got a new mortgage and an assumed mortgage. So a new mortgage and an assumed mortgage. So we need to pull these 3 things out of the question to be able to do this math here. So let's say that our purchase price, we'll say it's $300,000. Well, let's make it $300,025. You got really into the negotiations and you squeezed out an extra $25 out of the buyer. So we'll say that's what the purchase price is, $300,025. And you probably won't see a purchase price like that in the real world either. You could, but it's going to be important to understand how the math works in this question here. That's why I wanted to throw that extra $25 in there, because that will change what the answer is if you don't know these steps exactly that you've got to do here. Now for our new mortgage, let's say you take out a new mortgage of $200,000. And let's make it actually $200,025. That's how the buyer came up with that extra $25. They got their mortgage loan officer to throw that extra $25 in on the loan. And let's say that they're assuming a mortgage of, let's pick $47,510. So overall here, and this is what you want to pull out of the question, we've got our purchase price, $300,025. We've got our new mortgage, $200,025. And we've got our assumed mortgage of $47,510. Now on to the math. Now, like I said, I like to start out with the least amount of information that's going to give you that biggest impact. So especially if the answer choices are broken down into what these different taxes are. If the answer choice says this much doc stamp on the deed, this much doc stamp on the note, this much intangible tax, you could very easily eliminate some answer choices just by knowing how to calculate out that intangible tax. So we'll start with that. We'll start with the I in our DIN acronym here of the intangible tax. Because again, it is the easiest one to solve. And it's always good to start with the easy stuff. I know people like to say eat the frog first, but when you're taking an exam, if you go try to rack your brain with the most difficult questions right up front, you're going to end up really racking your brain. Your brain's going to get exhausted, and those easy questions are going to seem so much more difficult now because you're already wore out from those difficult questions. So always start with the easy stuff. So we take our new loan, and we're going to multiply it by 0.002. So our new mortgage and our new mortgage only, remember, that's what we're doing with the intangible tax, is just the new mortgage. We're going to take that $200,025, and we're going to multiply that by 0.002. And make sure when you take your exam, you bring a calculator so you don't set yourself up for failure by not being able to use a calculator on your exam. So $200,025.002 gives us $400.05. And that, my friends, is the intangible tax. Now, if the question was only asking what is the intangible tax, you're done right there. Nothing else you've got to do. Or maybe if it's just asking for the buyer's transfer taxes, and maybe the answer choices are laid out. This is the intangible tax, this is the doc stamp on the note, or this is the stamp tax, I might just say. And they've got all these different answer choices there, and if you could find some of them where $400.05 is your intangible tax, you could do some process of elimination right there. And remember, these are all debits, and for these two, these are the buyer's loan, but it's the seller's deed. Now again, with this question, this example, we're looking for all the taxes, which is how the exam, I would say, would probably be more likely to ask this question, because it does make this question a little bit more difficult to solve because you've got to do all three of these here, but they could just ask for just the buyers or just the sellers. Not every question is going to be the most difficult question in the world on your exam. So now for our stamp tax, let's do stamp tax on the deed. Our stamp on the deed. And remember, this one is based on the price, which we're going to divide by 100. That's going to give us our number of stamps. And remember here, this is where we've got to round up. And then we take that and multiply that by 0.70. So just plugging in our purchase price here of $300,025. We're going to divide that by 100. And now this is why I threw that extra 25 in here, because when we divide by 100, or really what we're doing is just moving two decimal places forward, or putting our calculator 300,025 divided by 100, you're going to end up with 3,000.25. Now remember, this is our stamps. Now, remember, we can't purchase a fraction of a stamp. We can't purchase, emergency mode here. That's why you can't use your phone on the calculator on the exam, so it doesn't go in emergency mode. But anyways, 3,025.25 stamps, we can't buy a quarter of a stamp. We can't buy 0.25 of a stamp. We can't rip off a quarter of a stamp and use that for our stamp tax, which means, and this is why, again, I want to throw that extra $25 in there, that we really need 3,001 stamps. We need 3,001 stamps in this particular question here because we've always got to round up with the number of stamps. And this is probably the biggest mistake people will make when they're trying to solve this calculation here, is because this goes totally against normal rounding rules. Normal rounding rules would say, oh, just round down here. Just cheat the government out of their extra quarter of a stamp. The government will not be happy with you if you cheat them out of that extra quarter of a stamp, which is why we've always got to round up. They're going to get an extra 70 cents out of this deal here, even though rounding rules would say you round down here. So now the law applies and not the math law, which really isn't a thing. But anyways, we take that 3,001 and we multiply that by 0.70. Pull out our handy dandy calculator, 3,001 times 0.70, and we get $2,100.70. So that's our stamp tax on the deed, $2,100.70. This would be our debit to the seller if it's asking how this is going to show on the closing statement. For the stamp tax on the deed, we'd have $2,100.70. Now, it is okay to have dollars and cents when you get to the final answer here, but it's not okay to have a fraction of a stamp. It's not okay to have a decimal for the number of stamps. That always needs to be a whole number. Then you just multiply it by 70 cents, and then that's going to give you the cost of your stamp tax on the deed. Now, if you could do this one, you could do the stamp tax on the note, but what's going to be different here when we do stamp tax on the note, and we'll put that up here in red, is number one, we do the loan amount. Number two, it's going to be 0.35. But other than that, it's really the same exact thing. We start with the loan amount instead of the price, and we multiply the number of stamps by 35 cents instead of 70 cents. So since we're running out of room on this whiteboard here, let's go ahead and do this right up top. Save this up here with our two loan amounts. Now remember, this is based on all the loans. The stamp on the note is based on all of the loans. So we need both of these loans here, the $200,025 new loan and the $47,510 assumed mortgage. We're going to need both of those mortgages. Now you might be inclined to add these together, but when you officially calculate out the transfer taxes, these are all calculated individually. So you don't just simply add together the two loan amounts, because in a case like this here, you'll end up being off by one stamp. So to make sure that's never an issue, because if this ends in 3 zeros here, you don't need to worry about having to calculate these separately. You could, in theory, add them together, and you're going to get the exact same answer. And most of the time, you're not going to have mortgages. Unless it's an assumed mortgage, that's usually the only time we're going to have them ending in these weird decimals, but who knows, even in the real world, you could see that on a new mortgage. But you always want to calculate these separately because you will be off by 35 cents on your exam in certain cases. So always calculate these as two separate calculations, which means we're going to take both of these loans and divide them by 100. So 200,025, we divide that by 100, and we're going to get 2,000.25. And then for 47,510, we're going to end up with 475.10. Now this is why you want to calculate these separately right here, is because for both of these, we're going to need an extra stamp. We need an extra stamp here to cover this 0.25, so really here we need 2,001 stamps, and for this one we're really going to need 476 stamps because of those decimals that we've got here. Again, we can't purchase a fraction of a stamp, so we need to round up to the next full number. Now if you combine these two loan amounts together, you're going to end up only rounding up one time instead of rounding up two times for two extra stamps, and that's why you'd be off by one stamp. It's rare that this happens, that this perfect storm works like this in the real world, but on your exam, they're likely to throw that at you. So just to be on the safe side, always calculate these out separately. So we've got our two different stamps. We're going to multiply each of these by 35 cents. And when we take 2,001 and multiply that by 35 cents, throw that right down here just so you can kind of follow along. So 2,001 times 35 cents, and then also 476. Both of those are bringing right down here. Times 35 cents. These are going to equal out to And at this point, you could add them together, but just to keep things simple, we'll keep them separate. We're going to end up with $700.35 for our stamp on the new mortgage, and then $476 times 0.35, $166.60 for the assumed mortgage. And then what we're doing really is adding the two of these together. So 735 plus 166.60. And we end up with exactly $866.95. So that would be our stamp on the note. The $400.05 is our intangible tax, and then the $2,170, that is our stamp tax on the deed. And again, if it's asking for all the taxes, it could break these out individually for your answer choices, or it might just give you $1 amount of the total of all three of those numbers together. The $866.95, the $405, and then the $2,170, which again, you just add those together to find out what that full total number is at the end. So I know we covered a lot today, but this is a big part. This is something very likely to be on almost every exam you take. I know they pull out of a bank of like 2,000 questions, but it would be extremely rare that you come across an exam, no matter how many times you've taken it, that does not have a transfer tax type of math question on the exam. In some way, shape, or form, it might be asking for all three of these. It might just be asking for the buyers, which is the stamp on the note and the intangible tax. It could just be asking for the sellers, which is the stamp tax on the deed. But the good news is, if you know all three of these, you could figure out all three of these individually, as well as figure out all three of them together. It's really just a matter of how long it takes you to go through and solve this. So hopefully this helps prepare you for your real estate exam. And hey, look, if you've already got your real estate license, hopefully this helps you better understand these computations that apply at the time of closing. But that's our transfer taxes. The more it is that you practice these, the easier it is that they'll get. The more it is you'll remember the steps it is you need to do to actually come up with these answers. So thank you guys for tuning in today. If you want more exam prep tools, remember we've got that great Pass First Try strategy at passfirsttry.com. That's passfirsttry.com. You could also go tune in and watch any of the previous episodes of Ask the Instructor or States of Real Estate at tampaschool.com/success. Again, that's tampaschool.com/success. Thank you guys for tuning in today. And remember, we've got State of Real Estate on Friday. So if you're looking for something to help you mastermind or grow your real estate business, tune in on Fridays for State of Real Estate. That's all the time we've got for today. Thank you guys for tuning in, and I'll see you Friday. Hey, so if you're thinking about starting a real estate career, it could feel a little overwhelming sometimes. Look, that's completely understandable. That's why we're here to help. If you haven't already, check out our Success Center, tampaschool.com/success, or if you don't even know where to begin, give us a call. We'd love to help you out. We've got advisors standing by to answer any questions you have and assist you in any way it is that we can. Our phone number is 813-928-0106. Again, that's 813-928-0106. Give us a call. We're the Tampa School of Real Estate.
Do you want a career that allows you to be in control? With a career in real estate, you'll get to call the shots. Whether you're looking at starting part-time or want to become the next top agent, a career in real estate makes it possible. Find out what it takes at tampaschool.com. Do you want to incorporate studying for your real estate exams into your busy schedule? Now you can review the key topics you need to know to pass your class and state exams with our MP3 audio review. Simply pop in your headphones or connect to your car to reinforce crucial information while you exercise or drive. Listen to the first unit for free at mp3audioreview.com. That's mp3audioreview.com.
Are you thinking about a career in real estate? Hey, I'm John Chrisma with the Tampa School of Real Estate, and we've helped thousands of people just like you obtain their real estate license. If you're thinking about a career in real estate, give us a call. The phone number is 813-928-0106. Our advisors are standing by to answer any questions you have and assist you in any way they can. Hey, if you're enjoying the show today, which I'm sure you are, be sure to hit like, subscribe, post your comments, share with your friends and family. Thank you guys so much for watching.